I'm excited to be joined by Morgan Krupetsky, Director of BD Institutions and Capital Markets, and Luigi DeMeo, Head of DeFi and Developer Relations from Avalanche for the third edition of our quarterly State of Avalanche call. The call will cover several topics around Avalanche, including a quick history and background, and then cover a review of use cases and app launches, platform updates, and partnerships over Q2. We'll wrap up the call looking ahead to the rest of the year around platform update and other things to look forward to in the second half of 2023. Quick reminder before we begin, the information contained in this webinar is for informational purposes only and should not be considered as investment advice. So with that, for our first-time listeners, guys, and Morgan, I'll ask you to respond first. Can you give us a little bit of a background on Avalanche? What is it? What differentiates it from other L1s? And how does Avalanche fit into the picture?
Sure. For those non-first-time listeners, sorry if this is becoming repetitive, but Josh, thanks for having us on.
We should pre-record that and have a skip button, for every quarter.
You should have like different chapters, but yeah, happy to go through this. And I think it's always a good reminder. But again, thank you for having me and Luigi on. So just taking a step back, Ava Labs was actually founded by a Cornell computer science and distributed systems professor named Dr. Emin Gunseer. And the platform was founded by him, as well as his then PhD students, Kevin Sekniki and Ted Yin. So today, Emin is Ava Labs founder and CEO. Kevin is our COO, and Ted is our chief protocol architect. Emin's actually been in the space since the beginning of cryptocurrencies. He's almost considered like an OG of OGs. At Cornell, he and his team kind of discovered a report published by a pseudonymous author called Team Rocket in 2018. And this report introduced what was called Avalanche consensus. And is obviously the thing after which the entire platform is named. An Avalanche consensus is really the third ever most novel consensus behind Classical and Nakamoto. So upon this discovery, the group from there kind of went on to build out the Avalanche protocol or platform. As a public blockchain network, Avalanche was launched by the Avalanche Foundation on mainnet in September of 2020. So in the grand scheme of things, it's still a relatively newer platform, but has had a lot of kind of success and adoption across a variety of different industries and verticals that we'll go through. But at the core, it's an open source layer 1 blockchain for decentralized applications. It is EVM compatible, but importantly, it's VM agnostic as it grows and scales. And we can kind of talk about, what that means and why that's important. And as a platform, there's really kind of two big differentiators, one of which I alluded to. The first is really the consensus mechanism that powers the network. Without like getting into specifics, which we can definitely do, but it's just extremely fast. It enables what's called sub-second transaction finality, which means transactions are considered final and irreversible within a second, which you can start to appreciate why it's like particularly important for a variety of use cases, but especially those in financial services. And it's able to scale kind of way beyond the 100 and 150 validators that traditionally bound a network running on classical consensus. At this point, we have about 1,300 validators, and that number can continue to grow to millions as the network scales. And the second big differentiator that effectively the consensus enables is this concept of sub-networks or subnets. And practically, you can think about them as application-specific blockchains that are uber customizable across a whole host of different parameters, which we can get into. But the vision for Avalanche has always been to primarily scale horizontally through app chains, through adding more blockchains. And so taking a step back, you can think about Avalanche as like a network of networks or blockchain of blockchains that are optimized and customized for many different use cases and industries, just depending on kind of what those respective use cases are, frankly, or what they're optimizing for. It's not to say that you can't build L2s on Avalanche, you certainly can. But the vision going all the way back to the white paper has always been this kind of network of networks concept where applicable, they interoperate and communicate and seamlessly enable things like asset transfer and liquidity transfer without the reliance on third-party bridges. So at a high level, I'd say those are the kind of the big differentiators from an Avalanche standpoint. And then Avalabs, which we get the question a lot in terms of like, what's the difference between the platform and the company Avalabs. Avalabs is really a software company building infrastructure, tooling, and partnerships to really drive forward the growth and adoption of the Avalanche blockchain. And so we can, on this call, obviously we'll talk about some of the work that's happening both on the infrastructure side of things, as well as the partnerships and use cases side of things as well.
So Avalanche has seen really significant user growth this year, over the last 30 or so days, averaging about 100,000 daily active wallets and having actually consecutive all-time high monthly active wallets in May and June. And so, are there specific projects or themes that are driving this uptake?
Yeah, so I think I could jump in here. I think there's been a variety of different types of applications that have deployed that have sort of garnered some traction. I always like to caveat that, sort of like monthly active wallets and these types of metrics aren't maybe the best way to kind of measure user adoption, since like one user can have multiple wallets, or like it incentivizes these ideas of bots. But generally speaking, the trend should be something to look out for. There's been a number of initiatives that have sort of, I think, contributed to this. There have been a decent amount of DeFi activity that has picked up with the launch of Trader Joe's liquidity book that has started to get traction. We've seen Uniswap v3 launch on Avalanche as well. So the more you have concentrated liquidity dexes, generally the more transactions that come in, which has been good for the network. We've also seen more wallets across different subnets on Avalanche. So Dexalot has launched their subnet, which is a central limited order book exchange. They're starting to get some traction and volume. And then also SK, which is the second largest conglomerate in South Korea, launched their subnet. It's not fully live yet in terms of the loyalty program that they're going to be doing. But to start, they've had their users claim NFTs, and at this point, I think they have upwards of 100,000 KYC'd actual real people who have claimed their loyalty passes so far. And I think within the next month or so, they'll start to actually transact and leverage the loyalty points from those programs. I think their whole audience is something like 20 million plus. So we're very excited about sort of like the fruits that can bear for the entire network. Sort of seen a lot of traction on various other gaming components on Avalanche. So there are a few different games that are currently live and a few others that are like imminent to deploy. So DeFi Kingdoms has sort of maintained steady traction. That project is built quite nicely throughout the bear market. They're like probably one of the more exciting projects in the bull market, and it's been an interesting thing, whole experience to watch that develop. So they're gaining traction as well. And then, lastly, I would just say, with respect to a lot of the user transactions, we've sort of seen some interest in new assets like EuroC, for example, which is Circle's new European stablecoin. So it's native to Avalanche, and it's also native to Ethereum mainnet, the only two chains that it's actually on right now. And we've seen a large amount of traction there. I've been dubbing it the FX chain, because God willing, I'm going to cement some narratives in. But I think at the moment it's doing on any given day about 3 to 5 times the volume that it's doing on Ethereum mainnet. And I think probably that lends itself to the lower fees, faster finality, as well as sort of like the capital efficiency of something like liquidity book on Trader Joe. So I think that's maybe also brought in a few additional users as well to leverage that.
I'd maybe just add there that what Luigi mentioned at the end about FX. I think FX is something that we're very focused on as a use case, really because it spans the retail side of the spectrum as well as the institutional side of the spectrum. And there's obviously a lot of use cases around payments, but also as it relates to hedging and kind of expressing macro views, especially in terms of expressing it in different FX pairs as well as against commodities. And so I think from an Avalanche specific perspective, we're very kind of confident in the fact that the platform is very conducive between the subsec and finality and the subnet capabilities to really facilitate whether it's micropayments or high frequency trading, whatever it is, just depending on whoever the user is. But this is something that we found is, again, really kind of scales the whole spectrum in terms of potential end users, and something that I think, frankly, is ripe for disruption in a lot of ways, particularly for more individuals and small to medium businesses.
So one of the major releases this quarter was AvaCloud, which I think you guys have described has been described as a no-code Web3 launchpad. Can you tell us a bit more about what that is and why you built it?
Yeah, so that really kind of goes back to the build out and proliferation of subnets. I think it's interesting because thematically, more and more these days, you're starting to hear people talking about the app chain thesis. And that's definitely kind of becoming increasingly pervasive in the industry. And I think we're really excited because it really validates what we've been kind of touting for a while now, which is that, when you look ahead and you think about mass adoption, it would be crazy to think that, and this is like the example that I always use, and I know Luigi likes Taylor Swift. So it's crazy to think about or conceptualize, a really popular Taylor Swift NFT drop would potentially impede upon the performance of like a multi-billion-dollar loan transaction between two institutions. Meaning, to think about mass adoption all happening on one single monolithic chain is just not feasible. Especially when there are so many more people to kind of onboard into Web3 and on chain. And so this idea of creating this network of customizable and optimized blockchains for a variety of different use cases and industries, whether it's financial services or government or gaming or DeFi, that's something that I think is people are starting to increasingly come around to. And from a subnet standpoint, obviously from an Avalanche perspective, that's kind of the way that we've envisioned executing on that future. And so with AvaCloud is really the infrastructure offering from Avalabs that helps whoever it is, individual companies, governments, individual projects, get to production as fast as possible and as easily as possible by building on subnets. And so, yeah, Josh, you mentioned it's the no-code Web3 launchpad for deploying Avalanche subnets. There's a variety of different kind of infrastructure offerings that form a menu of infrastructure options for builders and companies to choose from. So things like a managed validator set, RPC endpoints, block explorers. The ability to use, Avalanche warp messaging through Avalanche's native messaging protocol. All of these things are kind of like menu items that any builder or company can kind of choose from in terms of, helping them and supporting them and building out their own subnet environment. Generally speaking, when we build with companies, from an Avalab standpoint, we can be as much or as little involved as any given partner wants. And in a lot of cases these days, while I think people are increasingly kind of coming up the learning curve as it relates to building blockchains and building on chain, the AvaCloud offering I think has come in handy because it really helps. Again, it helps these companies to kind of build and focus on the application part of what their respective use cases are, and allows AvaCloud to kind of really help fill in the blanks, fill in the gaps as it relates to the infrastructure side of things. So it was like officially launched a few months ago, and we have and are continuing to see kind of adoption really across different industries, which we're definitely excited about in terms of demonstrating the viability of the business model and subnets kind of going forward.
And so how do you expect to just grow usage and get mass adoption, and kind of how do you quantify success of AvaCloud? Like, I mean, do you guys want to point all builders to AvaCloud, certain builders to AvaCloud? I mean, does success of AvaCloud kind of go hand in hand with success of development on the blockchain broadly? And for people listening that are developers, how do they get involved, or how do they get started using it?
Yeah, great questions. I think, in terms of measuring success, like if it really depends on what you're looking at. If you're looking at success of the Avalanche blockchain and platform as a whole, I would imagine that there could in the future be some correlation between success between AvaCloud and Avalanche, the blockchain, but I don't think that's a prerequisite to actually having success. There are other sort of providers out there that are looking to build these types of products, and subnets in general are public infrastructure and good that people can build upon. I just think that one thing that's been clear from the start with respect to how Avalabs treats infrastructure is that we don't necessarily, we're not going to rely on somebody else to actually get the core product to the end state. So we will provide an offering, and then those offerings can compete, in the open market, and hopefully together make each other better. That's the idea, really. But at the end of the day, like the subnets in particular, are the product and are eventually what people want to use and leverage. And AvaCloud is just a really interesting way to do that. Obviously, there's a lot of familiarity with the Avalanche blockchain within the Avalabs engineering team. And so, codifying that into a product, I think is just the natural evolution of how things would go. In terms of how to reach out, there's a form on the avacloud.io website that people could fill out and be contacted with respect to their interests. This is a product offering less than like an open source tooling type thing. So I think they could learn more from that perspective, and also on the website. And I think overall we're very excited about this. I think the product will look very different in 1 year from today versus where it is now. But I think we're at a point where people want their own blockchains, and we want to make it as easy as possible for them to have them.
And so to the Morgan hour of this segment, no, I'm just kidding. But,
no one wants to listen to me talk for an hour, Josh. Let's be honest.
I'm just kidding. Moving on to some institutional questions, though. Don't worry, everyone. It's not going to be an hour. That was mostly joking. But one of the really big announcements, which was extremely exciting last quarter, was Evergreen subnets. And so, as a refresher for everyone, can you explain what Evergreen subnets are and why they're so exciting for institutions? And I'd love to, hear about some of the key use cases you're now, obviously there were some that you launched with and you announced at launch, but really that you're starting to see being explored and implemented since the announcement came out.
Sure. So in terms of Evergreen subnets in particular, this really was conceptualized after speaking with many, many, many different financial institutions. And hearing kind of commonalities in terms of what they were looking for in a blockchain environment. A lot of financial institutions historically have deployed on what we would call like enterprise blockchains, like a Hyperledger, R3 Corda, or a Quorum. And I think over time, a lot of companies have come to appreciate the benefits that come with building on public blockchains. And benefiting from public blockchain development, infrastructure, the native integrations, as well as all the innovation that's happening from a DeFi standpoint, so on and so forth. And so I think a lot of institutions have gotten excited about and think about a future that, continues to benefit from those things. But obviously there's a lot of internal considerations and industry-wide considerations and regulatory considerations that they still need to account for. So they need to figure out how to kind of operationalize getting the best of both worlds. Fortunately, with subnets and specifically with Evergreen subnets, institutions can get the best of both, meaning they can create their own customized blockchain environment that accounts for things like permissioning, user permissioning as expressed by KYC or KYB, as well as a permissioned validator set. A custom gas token, which many regulated financial institutions these days can't hold like straight crypto tokens. So evergreen subnets allow institutions to use whether it's a bank issued stablecoin as a gas token, or frankly, a valueless token to power the transactions on their network. And then many institutions at this point are still comfortable and prefer to build on an EVM. So evergreen subnets kind of have these 4 key features embedded or templatized out of the box for them, which obviously they can kind of customize up or down from there. But importantly, what they also do is allow a few things. One, they allow the company kind of running or building the blockchain or the subnet to, if and when the regulatory environment kind of becomes more conducive for it, to open up their subnet for what we would call elastic or permissionless validation. And then also importantly, enables them to interoperate without the reliance on third-party bridges with other subnets. So if there's 2 financial institutions building their own subnets, they can transact with each other and only with each other without the reliance on third-party bridges through Avalanche's native messaging protocol called Avalanche Warp Messaging, and trade things like different assets, premiums, trade confirmations, RFQs, like whatever it is, the subnet architecture and the AWM kind of allows them to do that. So evergreen subnets were really kind of the way that institutions are kind of getting the best of both public blockchain infrastructure and development, as well as continuing to address a lot of the requirements that have historically driven them to launch on enterprise chains. There's a few evergreen subnets that are live. One being Intane. Intane is an asset-backed security on-chain administration platform, and now a tokenized marketplace that was built as an evergreen subnet. And then the other one that I'd point to is called Spruce, which we also announced kind of in tandem with the launch of Evergreen. This is a testnet environment where different institutions, kind of major traditional buy and sell side institutions, are coming in and testing out blockchain rails, DeFi applications to trade traditional assets. So things like FX, interest rate swaps, equities, private market securities, in this controlled environment that really lets them kind of to test out the rails. And then ultimately, in hopefully many cases, the idea would be to spin out into a mainnet evergreen subnet of their own, to put into production whatever it is that they're focused on. Most institutions these days, from a use case standpoint, are focused on tokenization, but also how to operationalize these tokens in the world of on-chain, something that we're calling on-chain finance. And so I think we'll start seeing more and more kind of in production use cases as the year progresses. And I also am just seeing that I'm getting a message that my Chrome is going to quit in 10 minutes. So if I sign off, I will be back.
So we will fit her institutional questions within this.
But
10
also,
minutes.
Luigi's been on this journey with me. So Luigi, if there's
I
anything
got the same message.
Oh, okay, cool.
I don't know.
Great. Okay. Well, hopefully that
We'll
doesn't happen. Okay. But yeah, I'll maybe I'll sing a song during the break or something. So you spoke about, obviously you have a couple of these evergreen subnets that are in production, but you're also working with a lot of large financial institutions. I think you can speak to the ones that you've announced publicly. When do you imagine that those go to production, and what needs to happen for those to actually go into a production environment?
Yeah. So I would say, I'd say a few things, just like taking a step back and even just thinking about what's been like out there publicly, just in the institutional cryptoverse, is even within banks, within asset managers, within private equity firms, there's a spectrum of how like progressive and public certain institutions are being with their respective initiatives. A lot of them, while a lot of them are kind of still early on in their journeys, others have kind of been at this for quite a bit longer. And so those are the ones that I think would kind of come to production with various on-chain use cases relatively sooner rather than later. So to that end, we are working with a handful of institutions on, production ready use cases. even so, it obviously takes a very long time to do and to build, and especially to create something that's kind of in production. But I would say within the next, within the next 9 months, we should see kind of more in production use cases, whether they're around tokenization, digital identity, things that again, a lot of these institutions have been working on for some time. And then those that are kind of earlier on in their journeys, again, are kind of using the Spruce environment as a way to test out a lot of the things that they have, either have been wanting to test out or that they're prioritizing. And then obviously that will take kind of longer to spin out into production. But I think generally speaking, those teams that are driving digital asset initiatives at their respective firms are, concretely looking for use cases to put these things into production. And because they either concretely create efficiencies or cost savings and or add incremental business revenue to their models, that's the mindset with which they're driving forward a lot of these initiatives. So it's not just doing stuff for the sake of doing stuff, but really honing in on things that make business sense that eventually will, spin out into in production use cases.
And so what does the, roadmap look like for the rest of the year? Not just for Evergreen and for Spruce and for, the subnets that are launched, but for your institutional efforts broadly.
So sure. So from an institutional standpoint, I would say like overall, we've really been focused on 3 overarching kind of goals or objectives for the institutional vertical from an Avalanche perspective. And because they're institutions, it's probably going to be a multi-year vision. But the first is really to embed Avalanche into the traditional financial services industry. And whenever, a traditional buy or sell side institution wants to deploy something on chain, that Avalanche is top of mind as a chain partner in that respect. So there's a lot of, and it will continue, but there's a lot of education and awareness that both actually Luigi and I do in terms of explaining to and meeting with various institutions about, what is Avalanche, what are the capabilities, how do we work with and engage with these various companies. And a lot of us come from actually the traditional financial services world and can kind of help become trusted advisors to a lot of these businesses as they go through internal governance processes and garner stakeholder buy-in internally. And so that will just continue, I would say. And I think, it's already started in that there's a ton of institutions that come to us now that are, already know us or that we've been kind of cultivating relationships with and who are ready to deploy something on an Evergreen subnet. And so that I think will just continue. The second kind of overarching focus has really been to ensure that Avalanche is driving forward, whether you want to call it institutional DeFi or on-chain finance, on-fi, and really kind of cultivating an ecosystem of institutional grade builders who have TradFi expertise, who have structured product pricing expertise, derivatives pricing expertise, and really kind of building different institutional grade protocols on Avalanche on top of all the primitives that have already been deployed and really kind of taking things to the next level. And then the third, I would say, is really driving forward Avalanche as the chain for, if you want to call it real world asset tokenization or the tokenization of off-chain assets, which we'll talk about in a bit. But Avalab's mission has always been to tokenize the world's assets. So it's something that even before it became popular again at the end of last year, it's something that the team has always been focused on from the beginning, and have different kind of reasons in terms of why we think that is the case, not just in financial services, but across the spectrum from a use case perspective. And it's something that that has driven this Avalanche Vista program that we'll talk about, but really kind of driving forward a high quality asset supply on Avalanche, as well as working with partners to cultivate robust demand and distribution strategies.
And so, an incredibly exciting update, which we've waited a while to announce here on this call, was your announcement yesterday of Avalanche Vista, where the Avalanche Foundation is allocating up to $50 million to purchase tokenized assets minted on Avalanche. Can you tell us a bit more about why you're so excited about tokenization, this program, and why the foundation, wanted to back it? And why don't we start there?
Sure. And Luigi, feel free to jump in also. But I think that, again, like the tokenization component, I think we believe is just kind of the next wrapper for assets to really kind of drive forward the next like version of financial services in terms of all the things that it plus smart contracts plus blockchain can enable, from transparency, settlement, utility, transferability perspective. So it's not necessarily the tokenization of itself in and of itself, but it's really kind of what that could mean from a financial services standpoint, as well as enterprise standpoint, engagement standpoint, and utility standpoint. So Avalanche Vista, like you mentioned, is a program that was launched by the Avalanche Foundation, where the idea would be to allocate up to $50 million over a like strategic and longer term period of time to buy tokenized assets that are tokenized on Avalanche. These assets could and will span the spectrum in terms of asset type, as well as liquidity type, as well as maturity type. So I think everything will be considered, from stablecoins to commodities to other financial assets, private equity, credit, infrastructure, real estate. I know Luigi's been looking for some tokenized wine on Avalanche. So if anybody's working on that, let us know. And so it really will kind of span the spectrum. But the idea is really to hone in on a select and strategic group of protocols and assets that are looking at the space in a few ways. One, that they are either bringing to market an asset that cannot be or is not really an investable asset class off-chain by neither institutional nor individual investors. So something that is blockchain native, as an example. Or if a protocol is focusing on tokenizing what we'd call like traditional assets, really kind of being able to distill the value proposition and concretely kind of quantify the efficiencies or cost savings or better user experience or whatever it is that comes with tokenizing this asset on chain versus accessing it in the traditional world, which I think is a challenge for some protocols. So it's something that we really want to work with protocols in terms of refining. And then also those teams that are really kind of thinking about and thoughtfully thinking about their go-to-market strategy and their demand and distribution strategies, and how they're cultivating their relationships with potential either end investors or distribution channels. And so the allocation is really kind of one of several ways that we'll be partnering with various projects and teams.
And so, Luigi, back to you. One of the things that you hit on earlier is the launch of Euro E and Euro C on Avalanche. Euro C being Circle backed and Euro E being MiCA compliant. Can you kind of speak about the importance or the reasons for non-USD stablecoins? Are there particular use cases that are more interesting for non-USD denominated stablecoins that weren't possible with just USD denominated stablecoins? And why do you think until this point, US dollar stablecoins have dominated the market so much?
Yeah, that's a great question. I think that in general, the dollar still remains the reserve currency of the world from a macro perspective. It's still accepted widely in many jurisdictions outside of the US as currency. And so because of that, I think it's not unreasonable to expect that it would have more dominance versus other stable coins out there. And so it made sense, I think, for the industry to start with that. And it's clear that right now in DeFi and for the most part, most assets are quoted in dollars. So that's sort of carried over from the traditional marketplace. Where there's more, sort of opportunity on the non-US stablecoins is really on two major fronts. One is really around the local currencies ability to get on-ramps and off-ramps within their relative, with their respective jurisdictions. So whether that's Singapore dollar or Polish zloty or GBP, whatever currency that is. It's easier to off ramp and on ramp into bank accounts in those countries with that currency. So I think naturally for payments to become prevalent on chain with something like stablecoins, we're going to need like non-US stablecoins that can easily be moved and transacted with deep liquidity. So I think like that the payment side is quite important. I'm excited to see more exciting non-US stablecoins in jurisdictions that like really need crypto. So some areas of LATAM, Middle East, Asia, etc. And the second overall exciting opportunity is really around FX trading. Obviously there's some counterparty risk with respect to stablecoins, but generally speaking, they represent, and I think as regulation sort of really develops here more so, they represent a claim on a currency. So if we can have 10 to 15 to 20 different stablecoins, all representing different types of looks like we lost Morgan. different types of FX, then we can create a true FX market on chain, right? With backed assets. So a lot of the way this has happened in the past is really through synthetic assets. But I think for different types of institutions to get involved, they're going to want to see FX trading with backed assets, true spot FX trading, and then derivatives can sort of result from those assets. So it's really payments in local currencies with on ramps and off ramps, and then the other side of it is true FX trading. I always talk about this G10 pool that I'm excited about, which is really like G10 currencies all in one pool. Very low impermanent loss, could generate a lot of fees. It'd be really fantastic. Like if you were just like take a step back and think about how many corporates hold many different currencies on their balance sheet that kind of sit idle. Well, instead of having those currencies sit idle, imagine those currencies all sitting in a pool earning yield, on trading fees while institutions are trading. That's a very different dynamic than something like the current model, which is where corporate wants to trade large FX. They go to a bank quotes it with price, bank takes the risk, bank then moves the risk to another buy-side institution or sell-side institution, and that process goes on and on. So it is actually disintermediation in the truest form, and so we're excited about that.
And so beyond stable coins, what are some other DeFi highlights that are worth pointing out? In terms of things that happened over the last quarter or to look forward to throughout the rest of the year. I think we lost Luigi. I think he also had to restart his browser. So
you know what? So that happened, and then I restarted this, and it's giving me the same message again.
All right. Well, maybe every 10 minutes you have to restart your browser.
Every 10 minutes I need to restart. DeFi. I can definitely get started, and then Luigi can fill in. But I think Luigi also touched on some of those things that we're excited about. I mean, even like the stable coins, obviously integrate into the DeFi ecosystem. And it's something that, again, we're very focused on the DeFi side of things as well as the institutional side of things. So everything he referenced as it relates to stable coins, you can see how there's like a joint institutional / DeFi approach to a lot of these things. But taking that further from an Avalanche DeFi specific perspective, I'd hone in on probably two protocols that kind of are really helping to drive forward this institutional grade builder, institutional product offering that have since launched over the past quarter. But that, there's kind of others in the pipeline that, that a lot of us are really excited about. So the first one is called Volts, which is an interest rate swap protocol that launched on Avalanche a couple months ago. And really it's facilitating SOFR rates. US SOFR rates, which I think is obviously it's a huge foundational building block in the world of traditional finance, and the fact that you can now kind of integrate this into the world of permissionless on-chain DeFi today is a huge building block that I think a lot of us are really excited to kind of see how that plays out in that world. And it's actually also an application that was launched on Spruce as well for institutions to kind of start testing out as well. So that's definitely one. And I think we're excited to kind of see, what it and other applications do in terms of potentially building on top of it, and using this on-chain SOFR rate as, again, as a building block. The other one that I would mention is a protocol called Struct Finance, that is effectively able to offer tranched yields, a fixed and a floating yield to end investors, and built on a variety of different kind of existing protocols. So I think that, again, these are just two examples of things that are really taking things to the next level from a DeFi standpoint, that have been built on top of a lot of the primitives that already exist on chain, and I think that are going to kind of progress in the months and years ahead. Others that I would actually mention, kind of in line with that view, are actually Fractal, which launched, I think it was in April. They are building basically like an on-chain prime brokerage, which allows institutional investors, liquid token funds, VC funds to address kind of greater capital efficiency when they deploy capital into different on-chain DeFi applications. So these are some of the things that I'd highlight that are really kind of enabling a more institutional investor and user base to start utilizing on-chain DeFi. Luigi, I talked about Volt and Struct and Fractal, but if there's any other DeFi highlights that you want to talk about or add to, feel free. But
yeah,
I started off there.
That was pretty frustrating. But yeah, I there's a few others that we can mention, like Dexalot, which is essential limit order book exchange on a subnet. Very interesting what they're doing. I know they're also trying to plug into liquidity on different chains, so that's going to be an update to really follow going forward. And then there's a perpetuals exchange called Hubble on Avalanche, which is on testnet right now. They built their own subnet by modifying the EVM. It's sort of a unique design because the way they built it is such that it's an order book perpetuals exchange, but each validator within the subnet holds their version of the order book. So it's truly a decentralized exchange, a true DEX in that sense. And that should go live on mainnet in a month or so. So really excited to see that sort of come to fruition, and like the experimentation of the true app chain, right? Because it is an app and it's actually its own chain. And by leveraging what you can do with the validator set, I think there's some excitement to see that kind of play out. And then there's obviously just the other applications that are really still gaining traction. Like Trader Joe's liquidity book, which is still progressing really well with their new launch of auto pools, which basically like moves liquidity in a concentrated form on its own. And then they've also like announced for some really cool features, like you could tag along with different leaderboards in liquidity book. So meaning like if you see some sort of LP or some sort of liquidity provider that's really doing very well, you can actually like sort of mimic their liquidity providing moves, sort of, and piggyback off of them. So some innovation going on that front too. I think yesterday it did about almost 70 million in volume in 24 hours. So there's starting to see some traction there too.
And so moving on from DeFi, one of the big focuses of last quarter on the enterprise front was SK subnets, which is something that we've already alluded to earlier in this call. So can you tell us a little bit about what SK subnets are, or what SK is, what the SK subnet is, who's using it, and what the impact has been thus far?
Yeah, I think there's, we alluded to it in the beginning, but really SK is the second largest conglomerate in South Korea. So they have many different traditional businesses. I think OK Cashback was the big one. And they're really trying to effectively engage their existing audience in businesses. So the idea here is basically there's a loyalty pass, and you get incentivized via this new via NFTs and tokens for using, for spending money at their stores. Where that is right now is they built their own subnet. That subnet is currently live, and basically they've been asking users to sort of claim their NFT, which represents their sort of like their future loyalty pass going forward. Like I said, about over 100,000 people, and these people have all been KYC'd within the wallet directly, have claimed those NFTs. And I think over the next month or so, the marketplace will launch where they'll be able to start trading these and earning points and whatnot. And so that's going to be really exciting to see take off. I think it's a well thought out use of loyalty points in an existing business that has a lot of users and capital moving amongst it. So, we're very excited about it. It was a big ordeal. The Twitter pictures of the signing memorandum between like Emin and their team was quite a sight to see. So, really looking forward to seeing that take off.
And so what about enterprise more broadly, and kind of other areas of enterprise that you're interested in, or where you expect to see growth and adoption over the rest of the year?
Sure. So I think the SK example is a very good example in terms of where we're kind of focused strategically from an enterprise standpoint. I think that also ties into the importance and focus on tokenization. It's just a different version of it. But I think that from a business development standpoint, we are very focused on kind of growing out and what I guess you would call it like non-financial Fortune 500 company types of tokenization, loyalty, utility token type of use cases. We have since the last time we spoke, onboarded someone onto our team who's really kind of focused on growing out this vertical from an enterprise standpoint. He has a background in kind of the entertainment, retail, and consumer space, and actually we should probably have him on in the upcoming sessions. But really to kind of grow out that vertical from, again, a loyalty rewards program perspective, and in a way for brands to kind of engage with their end consumers in a more direct way, and really kind of build utility on top of that connectivity, is I think where we are very excited, and where, again, the tokenization component is just like the means of execution by which we bring greater adoption and more people on chain, frankly, without them even feeling or knowing or caring that they're on chain, but that, they're able to get a lot more utility and a better user experience through this kind of execution method. So I'd say stay tuned for that, but it's definitely something that we're really focused on. And I think, to just bring back the kind of subnet component, I think a lot of companies, whether they're financial institutions or non-financial Fortune 500s, are really excited about this subnet concept, because the subnet environment allows them to customize their blockchain and tailor it for their particular use case from like a performance optimization standpoint, but also really allows them to tailor and cater certain parts about the blockchain that enable them to control their end-to-end user experience, and maintain the kind of same level of user experience that that the respective companies have kind of cultivated for their end customers and end users. So it's something that has really resonated with a lot of enterprises, as well as they look to build their various use cases on chain.
So the final sector, I know we've hit on a lot of sectors, a lot of information here, but the final sector I want to hit on is NFT and gaming. We've spent more time on that, in previous quarters, but are there anything worth highlighting, in both of those spaces from the past quarter, and anything, kind of planned throughout the rest of the year or this quarter?
Yeah, there's really a lot. We made a lot of traction, I think, especially on the gaming front. a lot of these have a very long sort of cycle to build. A few that come to mind is obviously Shrapnel, which I think will be launching in the beginning of next year. The TSM subnet is supposed to go live by the end of the year this year, which is really cool. They're leveraging their Blitz app, which has many titles such as League of Legends and others that users can use for sort of learning how to play a game and being incentivized for it. And then there's Gunzilla, which should be launching, I believe, in the fall. It's a game that's sort of been worked on for 3.5 years or so. That'll be a PlayStation, Xbox game with the subnet behind it, powering in-game assets. We're really pumped about that one as well. So, on top of that, there are different types of subnets like Merit Circle, building the Beam subnet. I think another one was announced today that the name escapes me, but we're seeing, I think, every day a ton of traction on the fact that people use subnets for gaming applications, and it's being a great infrastructure choice. And this is also where we're seeing a lot of traction on like the Alpha Cloud side. A lot of these entities can really use and leverage different types of services that we're offering, and it's actually helping inform the actual product offering itself in terms of what needs to be built and what people want. So I think, with respect to gaming, it's going to take a while in general, but I would say Q4 this year is really like the cliff where we should see a lot of these things start to go live and, have some new data on sort of how people are using this stuff.
So when I was at the Avalanche Summit in Barcelona in May, one of the things that you guys introduced was Teleporter. And so can you explain Teleporter a bit, how it's different from AWM, and what makes it better than current solutions, and how it's going to broadly impact the Avalanche ecosystem as it comes to accessing liquidity?
Yeah. So Avalanche Warp Messaging, AWM, is the way that different subnets communicate with each other. This leverages BLS signatures. And basically the value proposition is that you could have two independent subnets send messages to each other or tokens or whatever, without involving anybody else effectively, only their two validator sets. The benefit there is you don't need to trust a third party on top of the trust assumptions you're already making as a chain. So I think there's some nice properties that enterprises and also, various builders are excited about. Avalanche Warp Messaging, though, is just a very simple communication primitive. Teleporter is really the opinionated framework built on top of it that allows people to actually use AWM in like a more user-friendly way. You can kind of think of it as like an SDK that easily allows people to move tokens, NFTs, build like smart contracts across different subnets that automate workflows. That's a very important development for us. It unlocks a lot of, the reason people would want subnets, which is that they're going to want to communicate with the other subnets and the C chain in particular. Avalanche is a little different in the sense that it actually started with the hub first. The C chain is the hub. It's where most of the liquidity is, most of the activity is. And by starting with that first, all of the subnets necessarily don't need to decide or try to become the hub. They can, and that'll be interesting to watch happen over the ensuing months and years. But in general, it's very exciting because they know where the most decentralized network in the network of networks is, and they can leverage that for deep liquidity, for exchange integrations, for partner integrations like Oracle's, etc. So Teleporter will connect those subnets to all of those existing integrations and products as well. So I think it's going to be what unlocks really the mass adoption of subnets in general.
And so as we're coming up on the hour here, my final question for both of you guys, and Morgan, maybe you can answer this first, and then Luigi, looking forward, ahead to the rest of the year and beyond, what are you most excited about? First, I would say for crypto, given there have been a lot of developments over the last few months, and we know what I'm referring to, and for Avalanche more specifically.
Sure. And hopefully we can do this before my computer shuts down again. I think for crypto as an asset class, I think given some of the positive developments that have happened over the past few weeks, it's exciting to see institutions coming around to the idea that like crypto's here to stay and crypto could ultimately be considered another asset class. And it's exciting to see different institutions kind of coming back to the table and gearing up in a variety of ways to kind of help facilitate that on an institutional level, which, you know, when you talk about institutional levels of capital, that's really kind of what I think at least gets me excited, but I think should just get the industry excited overall. As it relates to just broader kind of Web3 and adoption, I think a lot of the things that Luigi referenced as it relates to the capabilities of AWM and Teleporter, I'm very excited to kind of see and really showcase to various communities kind of what has been kind of the vision all along, and to enable this kind of network of networks, the network of interoperable networks across different use cases in different industries. So really kind of demonstrating that and playing that out, I think I'm very excited for.
Luigi, same question for you.
Yeah. I think, for me, the space has sort of really gone through a bunch of iterations of sort of what's made it, attractive to outside folks, people who aren't, viewed as like crypto people every day. I think one of the things I'm more excited about, and I would say over like the next maybe like 2 years or so, is really this idea of integrating existing businesses into crypto, and that's really on the like loyalty points front. It's not really where I spend all my day, in terms of where I'm working, but I do enjoy like the idea of it, because if you can bring something to retail and show value to them, then the actual technology will continue to actually persist, and people can actually understand the value proposition. It wasn't until like people used things like Facebook and Twitter and all these different web apps and Web 2 that they understood exactly the value proposition of like online marketplaces. So when we could show that to people in retail, then they'll actually sort of understand the technology at a deeper level, and I think that'll be sort of pretty important. And I'm excited to see things like account abstraction, which can enable that. And that'll be a big move for this industry as a whole.
Awesome. Well, thank you both. This was great. Learned a lot, and looking forward to hosting you guys again next quarter.
Thanks so much.
Josh. Appreciate it.
Thank you.